Hello, everyone. Tony here. US equity markets closed lower on Friday, weighed down by an FT report that President Trump is calling for a minimum 15 to 20% tariff on imports from the EU. If President Trump's tariffs announced in recent weeks come into effect, they will see the average US tariff rate rise to around 22%, up from around 14%, which would be an additional hit to growth and consumer and business confidence and further boost inflation expectations. Offsetting these concerns, the current August 1 deadline could be extended and additional trade deals may also be announced. Looking ahead to this week, Tesla will be joined by approximately 119 other companies to report this week. This includes GM, Google, IBM, American Airlines, and also Intel. On the data front, there will be interest in the flash PMIs, home sales, and durable goods, and of course, on new tariff headlines. Let's take a look at the charts of the S&P and the NASDAQ to see where they are as they start this new week. This week, we're starting with the NASDAQ on the weekly time frame because it shows you quite clearly that it has been in an upward sloping trend channel with the rebound from the April low now up towards the top of this trend channel resistance. Now, it won't be an exact science, but generally speaking, we give it about 100 pips either way for the NASDAQ on a weekly time frame. But somewhere around 23,400, you'd expect this rally to start to stall or falter. Now, whether it turns into a wave 4, we need to be a little bit more focused on the shorter time frames. For me, I would need to see the NASDAQ break below support coming in around 22,600 to 500 to increase confidence that a wave 4 pullback is underway. And providing it holds above this 200-day moving average, broadly speaking around 20,850-ish, then I'd expect another leg higher for a wave 5. For the S&P, the weekly resistance level is significantly higher, coming in around 6650-ish. But because we see the NASDAQ as the leader in this uptrend, we'll go with the dominant features in the charts for that particular market. Now, we need to also be mindful that for the S&P to start to give us the indication that a wave 3 high is in place, this, if you recall, is your wave 1, your wave 2, this is your wave 3. For us to grow in confidence that a wave 3 high is in place, it needs to break below this yellow line, which is around 6,200 to 6,180-ish. And if that was to occur, I'd expect a pullback into this area here. 6,000 would be a really nice level, but you do have the 200-day moving average coming in a little bit lower, around 5870. But providing it holds this support area here, I would expect another leg higher for wave 5. That's all for this week, and thank you for listening.